Hi there traders, this is Chris from Elite Currency with a new video on the euro dollar and pound dollar, this time including a review of the August monthly candle. Alright, so let's start with the euro dollar. This is the weekly chart, and last week we had some good continuation to the upside, but as I was warning in the previous video, watch out for this resistance zone at around 117.50, 117.75. It's very strong, massive resistance confluence there. The 21 EMAs and a bunch of horizontal levels are there and psychological round levels. And about 117.33 is where price turned, made the high of last week, and then started to fall. And it actually is showing now a pin bar. That pin bar has, it's a pretty good pin bar, but I think it is just a retracement, because if you look at the monthly candle of August, as promised, we see a pretty big wick at the bottom. So there are kind of mixed messages with regard to the candlestick patterns on these higher time frames. And I think that looking at the monthly, this is looking like a bounce to the upside, in fact. Now, that does not mean that price cannot make a retracement of that candle before moving to the upside. But it seems to me likely that we'll get a bounce. If we put a fib from here to here, I think what's still happening is a bullish bounce at the 50 fib. I think that if this is a wave A, with a 5-wave pattern in it, and I think you can see that a little bit better on a weekly for those that like waves. 1, 2, 3, 4, 5 to finish A, and I think that this could be part of B. Within wave B, this could be wave A, this could be wave B, and up we go for wave C. All right. Now, forget waves for a moment, but just looking at chart patterns, you can see that there is a potential inverted head and shoulders here. So if price starts to move like this, hits this level at 115 and then bounce, you can see that there is a bigger zigzag pattern possible on this euro dollar. And if we put a fib from here to here, you can see that price could go up to 118.50, maybe 120.25. So let's get rid of this fib, all right, and let's put a fib from here to here to indicate where that wave B could stop. And you can see that price could go maybe to the 50 or 61.8 fib. And there, potentially, there's another head and shoulders, with this one being the left shoulder, this being the head, and here being the right shoulder. So if price does this, and then hits this resistance, and then starts to fall to complete this bigger ABC like this. So there are multiple chart patterns that could be played as well. So I think we're looking in the near future at this potential drop and rise towards this resistance zone and towards this target at around 121, 120.90, all right, roughly. Of course, it's just a rough zone. So let's get rid of these fibs again and start to zoom in and take a look what we can expect on lower time frames. Let's take a look at daily chart. So you can see the price was very close to hitting this long-term moving average, very close to hitting 117.50. That's where it bounced and started to move to the downside. And I think that this could be the first part, then it could bounce at the 21 EMA support, fill, move down like this in a 3-wave pattern back to that head and shoulders level around 115. Price clearly broke through this support trend line. So this bullish momentum, this swing with bullish momentum seems to be over. The MACD is confirming that because it went from thick blue lines to thin blue lines, and you can see the lines are converging, getting closer to each other. So I think that this swing is over. This bullish swing is over, and I think we're going to see some bearish correction at this moment. And that's what happened on Friday when price went into the 21 EMA and then ultimately broke below it to the downside. All right, so it seems to me that 5-wave patterns have finished here to complete wave A, and we're seeing some kind of ABC pattern here back to the downside here, being A, B, and down for C. So I wouldn't be surprised if price bounces at this long-term moving average and bounces maybe back to the 21 EMA, 50 fib, 61.8 fib resistance zone, maybe 38, and around 116.50, 116.75. Bounces there and then starts to move down to the minus 272 target at 115.40, or even the minus 61.8 target just below that round level at 115. All right, so there's a good confluence at 115. Now, if price were to break above this resistance trend line and break above the 61.8 fib and break above the 21 EMA, then something else might be going on, and there could be an immediate bullish breakout. You never know. I would like to see in that case, because price has gone below the 21 EMA for so long, I would want to see a break, a pullback to the 21 EMA, and a bounce at the 21 EMA. Very important. Otherwise, I would not be looking for any longs. That's what I would need for a long setup. If price, however, bounces at the long-term moving average, what I expect, gets back into the resistance zone, it doesn't break, but bounces and reverses back down, then I would be looking for a move down to these targets. And that's where I would expect, again, a bounce to the upside. So this is what I'm expecting is the path of least resistance. I'm, of course, waiting for price to respond to these moving averages, to these trend lines, to these fibs, and support and resistance levels with candlestick patterns to confirm that. And if I get that, then, of course, that could be potential trade setups that we send and trade ourselves, and we send inform members of ECS Live about our own trade setups. So this is what I think is the most likely. I don't think the hourly chart will give us much info here, except the fact that I guess it's just showing a bigger correction indeed. So this could have been one correction, or yes, this could have been an ABC. This is a wave X, and this could be A, and this could be B, and this could be C, for instance. Doesn't really matter. I think that the chart patterns confirm that a retrace here, and the trend confirms that this is a likely resistance spot for a bouncing spot for downside and an up. So let's see, and an up. So let's see if that happens. The pound dollar, we'll have an update on Tuesday again, of course, when we get new info and more info. Pound dollar also has a wick at the bottom and a bearish candle, a little bit bigger bearish candle probably than the euro dollar. It is a little bit different setting because it is breaking below the 21 EMA. HMA is down, and we're having a series of lower lows and lower highs. So I'm a little bit more bearish on the pound dollar at this moment. We do have weekly bullish candles, and they did not reach the 21 EMA yet. So the overall setting is quite bearish. If you compare that to the euro dollar, it did go back into 21 EMA. So pound dollar is a little bit more bearish from this point of view. And on the daily chart, we see that price really pulled away from the 21 EMA, and it went back into it as a retracement. This could still be a retracement, and this could still be a wave 4 because it did not break above this resistance trend line here, right? The horizontal resistance. So technically, it could still be a wave 4, and this could still be a pullback within the downtrend, and this could still lead to a wave 5 if price breaks below this support trend line. If it breaks below the 21 EMA on the daily chart, then this could just be a pullback. This could have been a classical ABC zigzag, hit resistance, and then starts to fall. But it needs to break below the trend line and the 21 EMA. On the 4-hour chart, it looks like it completed indeed a 3-wave pattern like this, perhaps this being 1, 2, 3. But again, it needs to break below this top, these tops right here. That would indicate that the upside is not strong anymore. It needs to break below the 21 EMA, the long-term moving average, and the trend line, and then we'll have a bearish break. In that case, bearish break, flag, continue seems likely. If, however, price bounces anywhere in here, then there could be still an alternative. There could still be a wave 4, bullish wave 4, all right? And in that case, price is still at the 50 fib. So if it bounces here, breaks above, and then continues like this, that could indicate a turn of events. That could indicate basically that the bearish wave 4 I mentioned is not valid anymore, and this could be a bigger uptrend. So I am very interested in this zone. Depends on how price responds to this level. If it breaks, if it bounces, pulls back and continues, it looks bullish. If it breaks, flag, and continues, it looks bearish with this break, obviously. So this is an important zone. If it makes a bearish break, it kind of confirms the overall structure I had in mind, which is this bearish wave 5. But if it breaks to the upside, it invalidates that, and we'll have to review it and reanalyze it on Tuesday or Thursday or next week. But then it's probably going to be a bigger kind of correction, a bigger, maybe even a wave 3 type of formation here, pattern that should extend a little bit further. You could see price going up to these fib targets basically. So in that case, it's best to trade on lower time frames, 1 hour, intraday, 15, maybe 4-hour chart, but not more, because ultimately the trend is down on those higher time frames. But if it does break to the upside and on lower time frames, there could be spaces between, there could be movements between these fib targets to the upside. All right, and in that case, we'll be looking for flags on lower time frames and breakouts, and using our ECS tools for trade setups. All right, so if you're interested in more about ECS Live or ECS tools like SWAT and ChemACD, check out elitecurrency.com. Also, there you'll find lots of free analysis daily, multiple times per day, in fact. And thank you for watching. See you all very soon, and cheers.